Welcome to Curious Commerce. Today's we will discussing on a topic Introduction to Financial Management. And this topic deeply we will understand the meaning or definitions of finance and financial management. Meaning of finance. Finance refers to the management of money, investments, and other financial instruments. It deals with how individuals, business, and government raise, allocate, and use funds over time, considering the risk and expected returns. Then also, the major question will be same but not resolved. That is, what is the meaning of management of money? For understanding purpose, imagine a story. There was a rich and prosperous kingdom. One day, the king noticed money was being wasted in that kingdom. Some villages had no funds. Some projects failed. People are confused about the savings. So the king called the finance minister and said, teach everyone how to manage money properly. This is how the study of finance and financial management begins. Finance means management of money or managing the money. But in that kingdom, farmers needed money for seeds. Traders needed money to buy goods. The king needed money for roads and construction activities. So, the finance is simply how money is earned, saved, spent, invested, and protected. On the basis of this story, maybe it is easy to understand. Finance means managing money. It includes how we earn money, how we save the money, how we spend money, how we invest money, how we protect money. But for all these questions, the preliminary question is why do we need finance? Every person, maybe the individual or the artificial person like business, enterprises, and government, needs money for daily activities, buying things, running businesses, building roads, hospitals, railway stations, airports. So, finance helps us use money properly and safely. So, now it is clear management of money means use money properly and safely for to understand the questions like how we earn money, how we save the money, how we spend money, how we invest money, how we protect money. Now we should continue towards the definitions of finance. The Oxford Dictionary defines finance means managing large amount of money especially by government or large companies. Goodman defined finance is concerned with the process, institutions, markets, and instruments involved in the transfer of money among individuals, business, and governments. H&U defines finance helps arrange cash and credit for goods. Basically, the finance we classified into three categories, that is personal finance, corporate or business finance, public or government finance. The personal finance include saving money in a bank, in RD account or SB account, taking a home loan, buying health insurance, investing in mutual fund. Corporate and business finance, like a company raising funds through shares or debentures, deciding to expand business by taking a loan, investing profit in new projects. Public and government finance, like government collecting taxes, allocating budget for education, defense, healthcare, and issuing government bonds. Some numerical examples for each type of the finance. The first category is the personal finance, what we discussed previously. If you invest or deposit 1 lakh rupees in a bank for 1 year with 6% interest, at the end of the year, the interest earned on the principal amount of 1 lakh rupees with consideration of 6% interest is 6,000 rupees. 6,000 rupees we called as in the interest, 1 lakh rupees we called as in the principal amount. At the end of the year, the investor received 1 lakh 6,000 rupees. That is the general common example for understanding the concept. In case of the business or corporate finance, a company want to build a new plant costing 50 lakh. For the investment of 50 lakh, the corporate authorities decide to mobilize the fund from the equity shares worth for around 30 lakh and the remaining 20 lakh from the bank loan. So this area shows that finance is the major tool for establish the artificial person or the business, and the same way for expansion also. So the corporate finance, it include the raising and allocation of funds. The third one is public finance. The government collect 10,000 crores in taxes, allocate 4,000 crores towards education, 3,000 crores towards the health, 2,000 crores towards the defense, and the remaining 1,000 crores to other activities of the government. This is finance at government level. The financial management meaning. Financial management is using money wisely to reach goals, includes planning, organizing, directing, and controlling. It ensures the efficient use of funds, balancing profitability, liquidity, and risk. Why the financial management is important? Because money is limited. Money is limited resource. Needs are unlimited, related to the individual person or the companies or the enterprises or the government. Wrong decisions waste resources. So that's why we should be very careful about the financial management aspects of the individual person or the artificial person. The major definitions of the financial management is Solomon. Financial management is concerned with the efficient use of the important economic resources. The economic resources is the major terminology you should be reminded on that, namely capital funds. Brigham defined the financial management is an area of financial decision making, harmonizing the individual motives and enterprise goals. As it defines, financial management deals with procurement of funds and their effective utilization in the business. If you consider three definitions, it is very easy to identify the key words like the economic resources. If it is the resource, we should take the proper decisions at the proper time. It should be correlate with the enterprise goals. The major the enterprise goal is depend on how we should procure of the fund and the effective utilization of funds in the business. The general examples related to the decision making process, majorly we classified into four types of the decisions. One is the investment decision, second one is the financing decision, third one is the dividend decision, fourth one is the working capital management or working capital decisions. So in the case of the investment decision, where should we put money? If you take the example of choosing whether to invest in project A or project B, where we should put our saved money towards as investment. If you take the second one, the buying new machinery or the used one or the outsourcing of the whole production process for producing something. So this type of the decisions we call as in the investment or in the investment decisions. In the case of the financing decisions, deciding how much to borrow from banks versus the issue shares or the maintaining a balance between the debt and equity. In this case, majorly we identify that where should we get money from. It means that what is the combination of debt and equity for the financing towards the artificial person or towards the individual life. The third one is the dividend decision. In this case, how much profit should be kept or shared with the shareholders or any other stakeholders. In this case, a company decided whether to distribute the profit as a dividend or invest in the business. It means that we call it as in the reinvestment. So how much profit should be kept for the reinvestment purpose, or how much profit we should distribute to the shareholders, so the 10% or 20% or plus, depend on the decision taken by the financing managers. The fourth one is the working capital management, ensuring the company has enough cash to pay salaries, suppliers, and day-to-day expenses, managing stock level to avoid shortage or overstock. So in every cases, the money played the huge role. On the same way, the decision is also very important. In the case of the investment, if you out instead of project A, if you out for project B, it may be causes a huge loss for the company. On the same way, certain times the new machinery is worth compared with the outsourcing of the whole production process. Or certain times the outsourcing of the whole production process is better compared with the acquisition of the new machinery or the used one. So that's why the huge complication is there. We are using the financial models to select which project is better, or which type of uh, the combination of debt and equity is better, how much profit we should distribute to the shareholders, or how much we should reinvest in the business. That is also very important. And the working capital, generally we called as the lifeblood of the business. It's lifeblood. Without the working capital, it is never imagined about in the business. That's why all these decisions are very important in each and every days of the business. The numerical examples related to the decision making process. In the case of the investment decisions, basically we are using the capital budgeting techniques for select which project is worth or which project is feasible for the investment activity. In this case, a company has the two projects, one is the project A and project B. Cost for the project A and project B will be same, that is 1 lakh rupees. The expected return from project A is 1 lakh 20 and project B is 1 lakh 15,000 rupees in a year. Which project is better? On the basis of the higher return, project A is more return compared with the project B. That's why we choose the project A on the basis of the higher return. Financial management helps in selecting the better investment on the basis of capital budgeting techniques. We have the n number of the capital budgeting techniques. In future classes, we'll discuss one by one. And based on that, so we select which project is worth. Financing decision, or it is famously called as a debt equity mix. If a company needs 10 lakh rupees, the company has the two options. The first option is take a bank loan at 10%. It means that 10% on 10 lakh rupees is 1 lakh rupees, that is the interest per year. If the company out the option second, issue of shares equivalent to 10 lakh rupees, no interest. It means that there is no commitment for the company related to the interest, but the shareholders expect dividend. Financial manager must decide best mix of debt and equity. Dividend decisions. Company earn 5 lakh rupees profit. Company has the two options. First option is pay dividend of 2 lakh rupees to shareholders and retain 3 lakh for expansion, or what we call as in the reinvestment. The second option is 1 lakh rupees to shareholders as a dividend and retain 4 lakh rupees for the expansion. So which option is better? The balance between rewarding shareholders and future growth. We should identify the interest of the shareholders and as well as the future growth of the company. On the basis of that, we should decide which option is better in dividend decisions, we are using certain models for select which option is better. Working capital management or working capital decisions. Company has cash of 2 lakh rupees, debtors 3 lakh rupees, inventory 5 lakh rupees, and current liabilities is 4 lakh. We calculate the current ratio with using of the formula cash plus debtors plus inventory divided by the current liabilities, that is 2.5 is to 1 is healthy. In the case of the working capital management, we are using the ratio analysis. How much we should maintain the working capital. So how much the minimum working capital we should maintain in the company. On the basis of that, we are taking the decisions. In short, finance means study of money, study of markets, and study of investments. Financial management means application of finance principles inside an organization to plan, control, and use of fund efficiently. But once again, why we should learn finance and financial management? As a financial manager or as the commerce graduate, we must know how to save money, how to avoid debt traps, how to invest, how to plan the future. That's why we should know about the finance and financial management. Smart money management leads to successful life. Smart decisions today create a brighter financial tomorrow. We should be smart related to the money and money management. We should be smart related to the decision making for better, brighter, successful life. That's why we should study finance. Thank you all, dear learners. If you are interested, please share and subscribe this channel to your friends. If you need the daily update, follow WhatsApp channel Curious Commerce Financial Management Hub. You will get daily updates about the financial matters. Thank you.